Welcome to Trading Lounge and the US indices for Friday, September the 17th. And today I'm going to talk about the bearish side of the market. Okay, so we need to be prepared. Now, we've got two situations for the bearish side. We can see that Apple has been giving five waves down from the top, so that's sort of one indication. There are other markets that have moved down from the top, like the NASDAQ, that haven't really given me a clear five-wave move to the downside. But the S&P 500, I can count that down, as we looked at it yesterday. We can count it down as corrective or impulsive. Now, the thing is that the current rally in the S&P 500 is actually corrective. So it's going to make the move, the last leg down that we've had, it's going to make that an impulse wave. So we're going to be having further downside. And we'll look at the S&P at the end of the video, and we'll look also at how to trade that short on the S&P at the end of the video as well. So I'll look at the Russell and I'll look at the NASDAQ, and when I look at the NASDAQ, I'm also going to have a look at the triple Q and the NASDAQ comp as well. So I've just been working on some counts with those. So, but they will be more further to the upside. So there's a few things that we need to get through today. But for the short-term traders, it's the shorting, how to short the S&P and the NASDAQ. From that point. So with the Russell here, which is very much like the SP500, it's never made a high above here so far. We know that the bull market is not over because we know that this is a corrective pattern. We just I don't know if it's finished yet. That's all. If it takes out this high here and gives us a high, then in one way or another we'll put the wave 3 over here. But otherwise, we need to be very mindful of any move below this level here. So that's where we can look to short it. So that's what we're going to have a look at now. And we were talking about this yesterday as well. So we were talking about it as a five-wave move down, very much like Apple and like the S&P. The NASDAQ has also moved down like this, but I find it a little bit tricky to count it in five waves. So I can force it, but yeah, here we will look at this as, just tidy this up a little bit. We'll use that as the B wave and this as the C wave moving higher at that point. So we'll just tidy those up. How far can this move up through here? I'm not sure if that's already five waves there. Need to go to the intraday, but taking that short trade out here would be taking that previous low out is really the key for this. So that could be the A wave, the C wave. Well, I'll leave it there. I need to go to the tick chart to sort that out. But as far as you would be concerned in this market, if you were long in this market, this can be your stop, and for other folks, that can be the short trade. You'd also be wanting to look for a classic trading levels pattern on the 2 here as well, because this move, when the market comes down through here, it's going to bounce, and then it will come through, and you have to wait for that first low below the level and then put that line at that point. I'll just move these out of the way because they're going to be way off anyway. So so on the short side there, we'll be looking for at the 2-2. We could see it quite simple like this. It comes down, bounces, goes straight through, retests, hits the level and goes down again. But keep your eye on this low and the second low. Now it can go back above the level, as you may know. So in this case it goes back above the level, so then you can still work these lows, but you need better off working this side, from this new trend here, working it from this point. But you can also work this low too. But when you're working this low in all of these markets, you need to look over here and look at what the price is. Not so much that low, but what the price point over here, what price are you working with, and then you'll look for another classic trading levels pattern at that particular point in time. So you can refine this a lot. There's always room for improvement. So let's move on to the NASDAQ. Now, we talked about this yesterday, where we can have a possible top in play here. This is being sort of conservative. There are other ways to look at this market, such as looking at this as wave 1 here. When I was looking at the markets yesterday with this, I'm not sure which one is first. Okay, so this is the NASDAQ comp. A little bit hard to read here, but if we looked at that, you can see that as wave 3 and wave 4 here, and then all of wave 5 way up yonder up here for the intermediate wave 3. So this is possible, but it's a bit of a long shot. It would be calling this wave 1 and 2 here, and then that wave 1 and 2 here. So on the comp, it works quite nicely like that. So then this wave 1 and 2 here, that will take this up to 3 and 4 here. So what we can be going through at the moment is the A wave down, the B wave and the C wave here for a wave 4. So this is where I think that we're at here. Yeah, so a much smaller wave 4 pulling back here. Then, yeah, as I mentioned, 1 and 2 here, and then 1 and 2 and 3 here, and going back for 4 in 3 waves. So not a very deep move. Come back and cover that gap probably, and then move up for 5 of 3 of 4 and 5 of 3. So this is quite a long shot to the upside. The other way, this here's the triple Q, and in this case it's kind of the same as, well, same but different. So we could look at the NASDAQ like this too, with 1 and 2 here. That goes with sort of without saying, well, not without saying, we need to check on that. But so in this case here, we're looking from wave 2, we've got 1 and 2 here, and 3 here and 4 here, and then looking for this extension in this 5th wave, which probably doesn't sort of seem that right. But in this case, instead of using this as 1 and 2 here and 1 and 2, we're using it all as 1 and 2. And then this move up through here, I've just counted this out through. Anyway, we've got wave 3 here. So this current move down in the NASDAQ, if we consider it, yeah, look, it may go up, but what I wanted to talk about today was the bear side. So what I'm saying here is that the move down here, if it is some sort of impulsive wave, then we would see a correction and another move down. It can pull down to the wave 4 of 1 lesser degree, or close to it. This would be at the 38.2% from this low here. So yeah, so even though we're kind of looking for this big wave 3 up here, over here as the example we're looking at today, we may just get a 3-wave move here and then another move up. That's what I'm sort of thinking. So this is also quite conservative, but it does give us another high up for the triple Q up into the 400, which would be the same as the NASDAQ. So just coming back here again, this was what we're looking at here, an A and a B and a C here. So this is a longer term move to the upside, which I'm quite happy about, because it makes wave 3 much longer than wave 1 at that point. So this is more hopeful at that point, but we can't go there yet. But the takeaway for this video today and tomorrow is really about this move coming down as a correction and coming back, finding support on top of these guys here. Basically, I can't get this chart any sort of open up further at this point. It's just the way, it's just an image. So this little wave 4 here, that's what I'm sort of thinking. I'm thinking that, we've had this move down. If it's going to be bearish, then we're going to just see it come down, into this space and then move up again. I'm not sure if we're going to get this bigger move here for this wave 4 here. Do you know what I mean? I think that's this one that we're looking at. So we'll need to be a little bit sort of careful with this, and this is what we're also looking at with some of the stock as well. So if we are going to be bearish, and I'm not saying that we am, but we are, but there's a good case that we are because of the S&P and stocks like Apple. So basically this move down through here, we've had the rally last night. So if we're in a bear market, then we're going to see Friday and Monday move down lower through here. So shorting these lows here would be what we'd be looking at. When we go to the next chart, it's a bit like still looking at a bit of a bullish count, but that's okay too. It doesn't really matter. We were looking at this as 1 and 2 and 3 and 4. Now this wave 4 here is really quite large compared to wave 2 here, so it's probably not right. So what we need to talk about here now really is that it could continue to move up there, right? But what we're going to do is we're talking about shorting that low just a moment ago. Now we're going to be talk about shorting that low because that should not be breached. This here, this move down through here, I find it difficult to count it as 5 waves, as I mentioned yesterday, but because of what the S&P is doing, we need to respect this. So as an A wave, a B wave, and a C wave here, taking that out would be the trade at that point. So on the hourly chart, it looks a little bit like this. So this is, don't worry about this. See, I've gone over this. It's very difficult to count this down as wave. I mean, I can count that down as wave 1, but I've still got this little move here. So it's not counting very well down here. Maybe we can count it in, in some other form or something, some other way. But it's definitely not 5 waves down. That's why I looked at it as an ABC. But today is really is about being cautious, So we talked about in the bigger picture shorting this low here, and then we talked about shorting this low here. That would be fine. We could also look at then, try to understand if there might be another high here, whatever. So you can adjust this. So if we look down at not so much the 50%, that would be the 450, but the 61.8%, 78.6. So coming over to 15.4, we could look at that in terms of shorting it at 15.4 as well. So we're getting a little bit closer to, we don't want that. We can look at 15.4. It's the same as that really, isn't it? So, yeah, let's just have a look on the tick chart here for this. Just squash this up a little bit. Right, so yeah, well, see, this is one of the things here. So from this low here, it's a bit difficult to count 5 waves up here. It's more like 3 waves. So that's why we can move this here. We can move this over here for that. This is what I wanted to look at here for this. So obviously this is wave 1 and 2 into this space to that point. This is 1, 2, 3, 4, 5 for the third wave. We could have that could be the top at that point. But what we can do is we could bring this up to this point here now. So that shouldn't, if it was going to be a long trade, so that brings us in around the 15,420 sort of area. So you can start to look at that there. So what we really need here now, we'll do more work on the S&P. I want to do more work on the S&P. So if you see 3 waves down, not just 1 wave, but 3 waves, then you can short under the third wave coming down. Let's have a look at the S&P, and I'm just going straight to the tick chart here because yesterday we looked at this as an ABC correction, but we also looked at all of this here as 1 and 2 and 3 and 4 and 5 for 1 and back for 2 here. We had this as the A and the B wave here. But the thing that sort of struck me here today to make this bearish was this move here, because we got very clearly we got 1 and 2 here, and then we've got the third wave and the fourth wave, or you could go an A. No, it'll be okay, and we could go an A and a B and a C here, but we still got 1, 2, 3, 4, and 5 here, so that's okay. And then we had the B wave here. We were there yesterday, so all of this here. It doesn't give, I mean, it gives me 5 waves, but it doesn't give, this would be the top of the third wave. We're looking for a fourth and then up for a fifth. So we didn't get the 5th wave coming in here. We just didn't get that 5th wave. If we'd got that 5th wave, that would have given us 1, 2, 3, 4, 5 up here. Then we know that we would have gotten an A, B, C, and then pushing higher at that point. So what I'm looking at here is I'm looking at a corrective rally here for wave A. And then obviously this is not wave C, that's wave B. And then we're looking for wave C here. So I just want to come back here for a moment. The best example of all of this we've got comes from Apple. So let's just look at Apple for a moment, just in case you haven't watched the stock video. So from the top here, you know, these markets have all moved, all the markets that have moved down from here, some of them like this, like Apple here, we can count this as a very clear 1 and 2 and 1 and 2 and 3 and 4 and 5 for the third wave, ABC for the fourth, and then 5 waves down here for the fifth wave. So this is a very clear count. Now on the NASDAQ, it's not very clear up the top here. The S&P 500, yes, we can count it down as 5 waves quite easily. So with Apple here, all we're looking at here in time, if the stocks are making the moves here, then we can count this as the A wave, the B wave, and the C wave. Now the C wave may make it up to the 50-60% retracement level where we can short it in the box because we've got a very clear 5 wave structure here. The other point here, you have to watch the video on the stocks to see what we've talked about in here. But in a nutshell, we've got the A wave, the B wave, and the C wave going up here. So the C wave here hasn't even reached the top of wave A here yet, right? So there's going to be a bit more. So it'll probably take us to the 150, the 151 sort of area, and then start to roll over. So in this case, we can just draw a line across the bottom here. And also, you know, you could do the same with the S&P and the NASDAQ as well. But when you come to these horizontal lines, just treat them like the trading levels because they'll come back and bounce off it, retest it, and then fail at that point. And then your short trade is through there at that point. So same sort of thing. So yes, look, Apple's got this move down, and obviously we're aware of this yesterday. But then, you know, lining it up with the S&P here, we can get 5 waves down, and I was sort of, you know, bullish about this. I could see it in both ways, but when I looked at the charts this morning and I see this hasn't finished off in 5 waves here for the A wave, then I know that we're in that we're in trouble at this point. Now, I could be wrong about this, but the video today really is about being mindful of the situation and having a strategy in place to work this. You know, we know a lot of the other stocks are topping out like Tesla and so on, and they've got a bit more to, and they all won't do the same thing at the same time. Many of them will, some of them won't. There's leaders and there's followers in all this sort of stuff. So yeah, so with the S&P here, we can look at this low here. We can bring it from this low to this low, and then we can bring it up to this point here as well. So let's just see what, we might even just go to the 10-tick chart, which I've got here. This is how I worked out my structure anyway. I just want to have a look at this. I can see that we've got 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. So we've got 5 waves here. That's 5 waves to that point. So this is 1, 2, 3, 4, 5. 1, 3, 4, 5. So that's 5 to there. That's 5 to there. I'm unsure about that. This overlaps that a little bit. I'm not going to worry about that too much because that's 5 waves in there, and you can see the 5 waves there, but that's 5 too. So that's 1 and 2 and 1 and 2 here. Well, I suppose that's 1 and 2 in here, and 3 and 4 and 5 to there. So that's probably, that would be the best fit, but there's still 2 here. So that I suppose we could link those two together. We can link that, and that. So that would be there. It's still 1 wave short though. We can go 1, 2, go 1, 2, 3, 4, and 5. We're still short 1 and 2 here. So that would be, this is probably a 4th wave here. That's at the 38.2% retracement level there. So that's That's okay. Do we have 5 waves down here? So we can look at this as 1, 2, 3, 4, and 5 at that point. This is 3. This is pulled back up too much, so that's 1, 2, that's 1, 2, 3, 4, 5, so that's a third wave, so that will make up 1 and 2. That will be 4 and 5. So this kind of makes here an A wave, a B wave, and a C wave to here at the 38.2% roughly. So that can move up there. What we need to watch out for is that we come back to this point and then we have another move down here. If that's the case, then this is going to give us 5 waves down. If that's the case, then we're going to have 3 waves back up. So that means that we can short at that point or this point. In terms of the levels, we've got 80 here, 72 and 65 here. So that's all of group 2 at that point. So another way to look at this is that we could say to ourselves, if the 465, the lower end of group 2, becomes the retested resistance here, then you know that we need to be short at that point. Okay, that's one way to look at it. If you can see that, if this just moves straight up from there, then you know we've got another high to come in place, which would be kind of suitable. But if we get 1, 2, 3, if we look at all of this as 1 and 2 and 3, we get one more rally back to here, then down, then you can look at that as wave 1 here, and then look this rally back here as wave 2, and you could also short through there as well. Just in case I've made a mistake, because the other way to sort of naturally look at this, I guess, would be look at all of that as 1 and 2 and 3 and 4 and 5, but it's really on the detail, it doesn't really count like that. But on the bigger picture here, just coming back here a little bit, so that's the 365 there. So we can go, if that is the top of wave C, let's just put that in here. Just gets us a little bit closer, that's all. So we need to look at that there as a short, but obviously that reference point low there. But it hasn't really taken out the top here just yet, so I think there's a bit, I think there's a bit more to this to go, do you know? Just seeing if I can count this any other way. Sometimes you look in a different time frame and it pops out a bit more, But yeah, no, I don't see anything there. But two things here is that the 4500 is the 50-60% retracement level. So really it's a bit of a line in the sand. So that means that if it becomes the support, then I've made a mistake and we're still bullish. So we would come up here, back again, would need that first high above the level. And then if there's anything at that point, then you can go long from there, right? And that would be above the 61.8%. And this little pattern basically tells you that this number is secure at that point. It means that the orders in the market depth have shifted around to give it the support if that top is taken out. But otherwise, this will just come down, retest that, and then start to move down. And you can also kind of understand too that we're working with this number. That's what it's all about, right? So we've got group 1 above and group 2 below. So if this market is played up here, right, and then come back down and finds group 2 as the resistance, especially the 4650, then you know that we need to be short at that point. You need to start building in short trades. Okay, so that's what we're talking about. We're talking about being mindful and careful that this move down here now can be counted as 5 waves because this is confirmed as an ABC pattern here. It means that we can take these lows out here. We may be able to get closer to the market. The market could move higher up into the 45 area here, but I would expect it to fail. If Friday closes weaker, then Monday's going to follow through as well. At minimum, we can expect this to come down to 4.4 here, but it will probably come a little bit lower. So just looking at it in the bigger picture here is that if, let's just assume for a moment that wave 3 top is in play there, right? So that means that from the low of this wave 2 to the top here, the 38.2% retracement level comes in around the 4100 area. Will it come back that far? I don't know. What we will do though is we'll just take it step by step. So we know that because if this is true, we've got 5 waves here. That means that we're going to have another 5 down here, right? Now, when we get those 5 waves, it's possible that we could just turn up from that point, or it's possible we can rally 38.2% or even 50-60% really, because when we're looking at 5 waves down, we can go, as I mentioned before, we can go 5 waves like this for the first leg, or we can go down for 1, back for 2, the same, and then down for 1, back for 2, down for 1, back for 2, there's kind of things, you know, and then we have that sort of, so it's just, we're going to get that anyway in here, but sometimes it just looks like that and you don't really see much in here, but other times it gives us much more form in here. So we'll have to be mindful of both of these counts. So really what we're talking about here is we're talking about, I should just put that a little bit closer there. So what we're talking about here is from this top here, we've got the first possible 5 wave structure down here. Now, if that is correct and we do take out the current lows here, so that would be the rally coming back into here. Now, we could get a strong 3rd wave down, taking us down, or we could get down to 400 here, and we could also come back 50-60%, right? And then come down again for like a sort of a 3rd wave coming into play, so to speak. I'll make that quite simple. So a 3rd wave, 5 waves here, and then would have a 4th wave, and then could have a 5th wave here. So the extension's in the 3rd wave. So that could possibly happen as well. But either whatever happens, this 1, 2, 3 here, this other low that comes in here, we will just be watching the rally coming in here to see if this is a corrective rally. If it's a corrective rally, then what we're doing here, we'll do the same again on that side. So it's a matter of just working. It's a matter of working through, you know. So just to recap this, it is possible for the market in the bigger picture here for wave 4, if that is the case, to come down to this level. Now, obviously, it's not going to come down in a straight line. Wave 4s get rather complicated. So we'd probably be looking at, if I can just, don't need that one, the A wave, the B wave, and the C wave. I mean, even that is really quite simple. So for the A wave here, we need to figure out if we get 3 waves down for the A wave, or we get 5 waves down for the A wave. So 1, 2, 3, 4, 5. I'll put this ABC here, but obviously this is going to be adjusted because I don't know if we're going to get 5 waves down here or 3 waves. So we're just going to have to work it as we go, okay? If this low doesn't get breached, well then we've got to count to the upside, and the 4,500 would need to be secured as support with the classic trading levels pattern here, because that's the 50-60% retracement level at that point. So all we're doing today is really just going, okay, I mean, because everybody's looking at these here going reoccurring patterns, you know, and that's fine, and that could possibly work. But all these here took, like, say, 3 to 4 days to come down. We've been here more than 3 or 4 days, so there's more weight in this than these, right? So we don't want to fall asleep at the wheel here, okay? So yeah, this is what we're doing, as simple as that. So I'll leave it at that, and yeah, if Friday doesn't close strong, it closes weaker, then you know that Monday's likely to follow through on that, and you know, you need, if you've got any long trades out there, you'll need to tighten them all up. Okay, I'll leave it at that. Thanks for tuning in. Cheers.